Hello, everybody, and welcome this week. Today is January 15th, 5 days before Donald J. Trump is inaugurated, which has been interesting and I'm sure will continue to be. He's been given a lot of credit for the rally and all that's going on in the markets. Don't know if that's true. I guess there's no way to really know. The market has been, was strong there right after the election, and mostly it's been kind of chopping sideways to slightly down and now up. And there's a lot of talk about it being fully valued. There's bull markets lasted 8 years now. That's quite long for a bull market. So anyway, there's a lot of opinions. We're just going to watch the charts because that'll tell us whether or not our money is in jeopardy or whether it's growing. So this chart of the S&P 500, and you can see really since 2015 until mid 2016 we were trading sideways. And then we broke out a little bit, retested, and then have rallied up in this most recent wave up. You can kind of see here. Now, what I was talking about a while back, and I don't know if this is going to work out. I guess there's still a little time left. That's long, that's a little shorter, and that is about the same. Now, the rule on this is this last one, well, the rule is this middle one can't be the shortest. So we're getting really close, and in fact, we might already be past that. I think on the futures, this is still longer than this. So given that, there's a slight chance that this could end quickly, back down to about here. But there's a lot of enthusiasm for this market, and it's hard to overlook that. So my guess is we probably should not. If you look at the VIX is very low. There's a saying, if the VIX is low, it's time to go. But you can't trade on sayings. But notice that it really doesn't want to go much lower than this level right here. Even this level here is, is comparable. So these are about as low. This is about as low as the VIX wants to go. So it could chop around here for a while, as it did back here, and as it's done right in here. But it really doesn't look like it wants to go lower, and so that tells me that the market's got to be close to some sort of pullback. I don't know if that's this week, next month. Maybe it's, buy the rumor, sell the news. Maybe the rumor is Trump's going to do all this good stuff, and then after the inauguration we find out he really can't do any of it, and so that's sell the news. The news that he can't do anything. But I don't, who knows? I don't know. I'm just speculating. Let's look at the 13-week Treasury. We've been looking at interest rates. Interest rates have recently pulled back in a little bit, but the 13-week Treasury still trading well above this line here that we said that if we traded above this line, the Fed would raise rates. And of course, the Fed did raise rates. And I think the Fed, the Fed's not going to raise rates every month or anything like that, but what they're doing is they're following what the rates are, and then they're responding. So right now you got kind of a pullback in rates. Here's the 10-year Treasury, and we've talked about this pulling back to at least close this gap. Now it might do one of these, might pull up here and then pull down, close the gap, might even go a little lower, like maybe right in here. But if it starts to turn up, my recommendation, and I can't make recommendations, but my recommendation is that you not be in any bond funds, because those are going to lose a lot of money. 30-year Treasury looks the same, but clearly we've broken this downtrend line. We've accelerated out quite rapidly. Excuse me. Sorry about that. Apologize. And so, this could very well be the bottom in rates, and the next 30 years is going to basically move upward. Let's see, the euro US dollar. The euro's been kind of fighting back here recently, probably on its way to retest this the underside of this triangle. That's not uncommon. You might see might not make it all the way back up there, but could, and then fall back down. So if you're looking to get short the euro, you might wait for some confirmation to the downside, and that might look like, like a candle like so, and then another candle like so, and then a candle like so. This would be confirmation, because this would be, let's say, a new high, and then you would have a close here below this high candle. So that's what confirmation would look like. Germany and Japan have been looking a little bit stronger. You can see Germany has pulled out of this downtrend line that we've been pointing out for a while. We thought maybe it was going to roll over and go lower here, because it was, this area kind of ground the trend to a halt. Looked like it was going to roll over and come on back down and follow the channel. But it pulled back a little bit and rallied out of the channel. So this could be Germany turning around. What I would, my first, if I'm long Germany at this point, I would just connect these lows. And if you get some sort of break below this, then maybe you take some money off the table, or you set that as a stop. Because if that downtrend line is going to hold, it should continue to hold. Japan, Japan had that resistance up here that we've had forever, and it just seems like it wants to make its way up there, and it probably will. But Japan's doing some crazy monetary expansion, and they got a serious demographic problem in that country, worse than ours actually. I read somewhere that they sell more adult underwear, adult diapers than they do kid diapers. That's a pretty amazing fact. So their country doesn't quite know how to deal with that, so they've been monetizing debt and printing money and doing stuff like that. So I think what we want to do from here is just switch over to the TOS charts and look at the dollar. Here's the dollar. Now the dollar, didn't quite make it to our little resistance area, and maybe it still will. I don't know. Again, you could draw a trend line underneath these, and this may pull back to the trend line and then bounce, and then if the trend line breaks, then you want to get out of your dollar position or something. And the trend line I'm speaking of is this one right here. Not this one way back here, but this one here. So you could see this kind of meander its way back to here, but then you should get a bounce to higher prices. So and this is just normal uptrending behavior. The market, it accelerates up, it rallies sideways to down, and then it accelerates up again. Gold. Gold looks like it's finally through pulling back. So if you're going to be long gold, or you wanted to be buying gold, it's probably not a bad time. Sorry about all the back and forth here. Because gold is probably going to make its way all the way up to here before it comes down really strong to below these lows, below 1,050 area. Now, I've been talking about, the big picture in gold could go all the way to, see if I can pull it, down here in this area. But it might not. We'll just have to wait and see. Let's look at oil. A lot of talking about oil recently. There's a lot of talk about oil being range bound for the next, decade. And that could be. I think it's too early to tell right now. This could just be the first move in a very large sideways pattern that could take us out, a couple, 3 years. Silver looks a lot like gold. Sorry about the pause. I was doing something real quick. Yeah, so silver looks a lot like gold, and the silver looks like it's a little bit ahead of gold, maybe just slightly, and so we should see silver rally up into somewhere up in this area before another pullback. And this whole move in silver could take 5, 6, 7 years, 8 years maybe before it's fully done pulling back. And so, it's not a bad place to acquire silver and gold right here. I've talked about some of the problems and the potential problems in waiting until you get way back in here, or below 10. One, it might not make it that low, and two, the supply of silver may be very tight right here, and so commissions commissions are higher, and so I'm talking about physical silver, by the way. So maybe you're able to buy it at 12.5, but instead of $1.80 or $2 an ounce in commission, you're paying $4 or $5 an ounce in commission. So, okay, so that puts you right back at 17.5. So my point is, right now commissions are very low on silver. If you're going to acquire silver, this is a pretty good place to do it. The commissions are pretty low, and the price is low. We don't know what the situation is going to be if and when it pulls back to here. So if you're someone who's trying to accumulate silver and gold, great place to do it. I would look for silver to run up into this 22.5, 25 area before it starts a multi-year pullback again down below here somewhere. Man, that's really don't have that much to say about the markets. They've been kind of quiet and boring. We had a rapid move in the broad markets, right through here where Trump. Let me go to a 2-year chart so I can get on a daily. But this move right here was very, very rapid. And we had a pullback, and then we had another pretty rapid move up. But really, since a week or two before Christmas, we've just been really trading sideways. And when these pullbacks start getting close together like this, this is just a little insight here, incidental insight. See how there's a pullback here, okay, and there's a pullback here, but the distance between these pullbacks is pretty far, both in price and in time. But then see the pullbacks they start getting more frequent like this and this, and see how they're closer together, a little bit closer together. And when that starts happening, you could be building kind of a top and starting to roll over. So I don't know. I think I've been saying this for a while, so I've been wrong pretty much, but I think there's a lot of risk in the market. There's just not that much room for it to move up. And when I say not much room, maybe 100 points on the S&P 500. So you might be able to go from 2274 to 23, right up here to 2375, but that's about it. But man, the downside risk is way down here at 1800, 500 points below. So I look at that and I think, man, I really just don't want any part of that. But everybody has to make their own decisions. You could say, well, that's, Seth, that's picking a top, and there's some truth to that. But the VIX is also low. The market's overowned and overloved. So there's some other factors there that some psychological factors that play into such decisions. So anyway, but I think here, if you're in, you probably stay with it, and we wait for evidence. That's probably the best way to do it if you're still in. If you're not in, I don't know that I would get in here, but that's up to everybody listening. Everybody has to make their own investment decisions. I'm just trying to provide a little context from the charts and help you make better decisions. But right now, unfortunately, I'm not able to help you make a better decision. I'll just have to admit that. Sometimes the markets aren't as clear as we'd like for them to be. And I think this is one of those times. I mean, I think you could see the market drift a little higher to this trend line, or you could see it pull back to here and then move to this trend line, or you could just see it make a slight higher high and then just start to roll over from here. Those are the three possibilities I see. So, all right, everybody, that is it for this week. I'm going to go ahead and shut it down. The Cowboy game has started. I'd like to watch that, even though I live in the Houston area now, and like to root for the Cowboys. The Texans lost last night, and so I really, this is the only time of the year I really watch football is after everybody gets into the playoffs, because it seems like this is where the best games are. So maybe you enjoy that too. All right, until next week, everybody, we'll see you. Take care. Bye-bye.